What's going on, everyone? In this video, I'm going to be going over the winning trader's mindset and the mindset that consistently profitable traders possess. All right, so for those of you that know me well, I'm a big fan of Mark Douglas and his books. He says it best. The markets are an endless flow of opportunity. Now, don't take that literally. It does not necessarily mean that every minute of every single day the market is going to present an opportunity to you, But instead, over time, the market is going to give you the opportunity to make money. Okay, there are no guarantees in trading. There are no guarantees in investing. I think that's a pretty universally accepted concept. But to me, the one guarantee the market does offer is there's always going to be an opportunity. Okay, so traders know that there are no guarantees in the markets. So instead, that means they are process oriented, not money oriented. Instead, they are going to be focused on the process that makes them money. Okay, winning traders focus on their edge and their system. They are not solely focused on making money, because making money can lead to FOMO and to trading on tilt, because it can lead you to following large impulse moves in the market that you necessarily should not be trading. Okay, winning traders understand that each trade is a coin flip, and the outcome of each trade is always 50-50. Okay, I like to say this a lot. Trade A has no impact on trade B. They are two separate trades. The market does not know that they are two separate trades, that they are one single trade. Okay, that's not how the market looks at it. The market looks at it as two separate trades. Winning traders understand that same thing. Trade A can be a loss, and that losing trade has no impact on the outcome of trade B. Okay, trade A can be a win. The outcome of trade A, even though it's a win, does not mean anything for the outcome of trade B. No matter the outcome of trade A, trade B can be a win or it can be a loss. Okay, only in a trader's mind and in our subconscious do we allow the outcome of trade A affect the outcome of trade B. Okay, and that is something that a lot of traders struggle with. They constantly look in the past. They're constantly looking at the outcome of trade A. When in reality, each trade is going to be a coin flip. There is going to be no connection in the markets between two separate trades. Okay, the market definitely does not look at it that way, so why should you? Okay, winning traders do not know where the markets are going to go next. You do not need to know where the markets goes next in order to make money. Okay, think about that for a second. You do not need to know what happens next in order to make money. All right, winning traders know that they control three things. Okay, and this is what's going to help you make consistent profits. You control your entry, you control your exit, and you control your position sizing. Okay, when we're talking about your entry, you control when you become a participant in the market. Okay, you get to decide when you expose yourself to the market, when you're going to place trading capital in the market. Okay, that decision is solely up to you, and it is not based on anyone else. Just like you control your entry, you get to control your exit. You get to decide when you exit the market as a participant and when you completely take risk out of the markets for a win or a loss. You decide that, no one else. The market does not dictate that for you. You solely dictate that. And the third thing is you control your position sizing. You get to decide how much risk, how much trading capital you are putting into a single trade. Okay, the market does not dictate that for you. You decide that. If you can take responsibility for these three things right here, your entry, your exit, and your position sizing, it can go a long ways toward developing a winning trader's mindset. All right, now, there are three acceptable outcomes for a trade, and this is going to be super key to managing risk and essentially having a long trading career. Okay, the first acceptable outcome is a win. It does not matter if it's a big win, it does not matter if it's a small win. A winning trade is always an acceptable outcome. The second outcome is break even. You exit the trade for no loss and no gain. Okay, the setup never came to fruition. It never met your profit goals, and the trade started to move against you, so you sold for break even, and instead of incurring a loss. The third acceptable outcome is a small loss. Winning traders know that losses are inevitable. That is a certainty. That is another certainty that the market provides you, I guess, is that a loss is inevitable. You will never have a 100% win rate in the market, okay? But a small loss and keeping your losses to a minimum, that's what's going to keep your trading account intact, okay? Not incurring a large drawdown that can be emotionally devastating for you and permanently throwing yourself into tilt. That is going to go a long ways towards putting longevity on your side, okay? So a small loss is the only way that a losing trade is acceptable. A big loss, a big drawdown is never acceptable. And if you do experience that, you need to review your trades, go in through your journal, and see where you went wrong. Whether it was over position sizing or holding a loser past your stop loss, you went wrong somewhere, and it is up to you to take personal responsibility to fix that error so it does not happen again. Okay? Traders have an edge in a system that they follow religiously. Winning traders know that everything else outside of their system and their edge is noise, and they don't pay attention to it. Okay? A series of wins or losses do not break faith or confidence in their system. Okay? Winning traders do not experience euphoria when they go on a winning streak. Okay? They do not experience euphoria. Just like winning traders do not experience tilt, and they do not go on a mental downward spiral after a series of losses. Okay? Winning traders understand winning traders understand their system and their edge will not always be present in the market, in the now moment. So when their system and their edge is not present, they wait patiently for the market to present another opportunity. Remember what Mark Douglas says. The markets are an endless flow of opportunity. Eventually, the market is going to give you another opportunity to make money based on your system and based on your edge. Okay, it's up to you to be ready to capitalize on that when the opportunity does arrive. Winning traders' edge allows them to know when to be a spectator versus being a participant. Okay, based on your system and based on your edge, you know when to put risk on the line in the markets. You know when to enter a trade. Okay, when your system and your edge is not present, that is the time to be a passive a spectator, and you will sit patiently on your hands with no risk on the line, waiting for the market to generate an opportunity for you. Okay? Last but not least, winning traders know one missed opportunity, they do not let it impact their mental edge. They do not enter tilt, and they especially do not feel FOMO. Okay? Oftentimes, after the market makes a large impulse move, whether it is, like, for example, SPY rallying $3 to $5, or SPY selling off $7. Okay, if you do not catch a piece of that move, struggling traders will enter what usually happens to be at the top or at the bottom of a large trend move before the market reverses against them, and they incur a loss because they gave into FOMO. Okay, a winning trader knows if they miss one opportunity, there's going to be another one that they can take advantage of. Remember, it is a guarantee in the markets another opportunity is going to present itself. It's up to you to be ready. If you miss one opportunity, it is not the end of the world. The markets have been here for decades. They're going to continue to be here for decades more. It's okay if you miss one opportunity, and winning traders know this. Instead, they're going to sit patiently again. They're going to see why they missed the one opportunity that they missed out on. They're going to learn from it, and they're going to be better prepared when the next opportunity arises. Okay? Winning traders remain open to new information. This is especially important when you are in an open position, Okay? You are going to be able to analyze the markets from an objective and neutral point of view. You're going to remain flexible, and you're willing to adapt to new information in the now moment. Okay? If you are long in oil and watching price action, watching price and volume, The market tells you that the uptrend is about to reverse. You digest that new information from the now moment immediately, and you're able to capitalize on that by potentially locking in profit on your long trade, and you are taking risk off the table. Okay, remember, there are 3 acceptable outcomes to a trade. One of them is always going to be a win. Okay, your ability to remain flexible and to adapt to new information the market gives you is going to help you stay on a neutral point of view. And it's going to help you stay flat and avoid entering tilt. Okay? Winning traders know their number one job is to manage risk. That is your number one job as a trader, and winning traders know this. Okay? You need to understand losses are inevitable. Okay? You can literally lose 49% of the time, and you can still be a consistently profitable trader. Okay? Position sizing, when you enter and when you exit, is going to help you stay overall consistent and overall profitable. Okay? Winning traders know they do not need to add unnecessary risk. Giving into FOMO, trading earnings reports during big tech earnings week. Okay, having open positions into FOMC announcements, expecting to be the first one into a large move. Okay, that is unnecessary risk. Winning traders stay out of that. They let the market do its thing. They let the struggling 90% of traders who fail give their money to the market, trading those irrational environments or trading those extremely volatile environments. That's a better way to put it. Okay, earnings reports are always a gamble. Trading FOMC, you're talking about a large impulse move that can happen in seconds, and you can very easily get blown out of the water and experience a large drawdown. That was completely avoidable. Struggling traders give in to those urges to hit it big, and they often become boom and bust traders. Okay, winning traders know they're only going to trade with the size they're comfortable with. They do not give in to emotions. They don't give in to the emotions of greed, of hitting it big on an earnings report, where a stock rips $50, $60 on an earnings report. Okay, the exact opposite can happen, and you can incur a large drawdown. Okay, this is my first video of many on trading psychology, and I wanted this one to be about a winning trader's mindset. Feel free to like this video, feel free to comment what you enjoyed, and feel free to comment as well what future videos you would like me to cover. Thank you.